So, picture this. It's December 2nd, 2025, and India's economy is sending some seriously mixed signals. I mean, the data was telling two completely different stories on the very same day. And today, we're going to unpack exactly what was going on.
The headlines were just all over the place. On one hand, you've got the stock market hitting a brand new all-time high, which sounds amazing, right? But at the exact same moment, the national currency, the rupee, completely crashed to a record low. So how is that even possible? How can an economy be booming and busting at the same time?
So that's the big question, isn't it? How can you have this soaring success story and what looks like a sinking ship all at once? Let's dive in and really get to the bottom of what was happening behind those numbers.
Okay, so this whole mystery, it really boils down to two key numbers. Two pieces of economic data that were pulling in completely opposite directions and created this really strange situation.
First up, you've got this absolute monster of a number. The economy was growing at a blistering 8.2%. I mean, for a huge economy like India, that's just fantastic. It's a sign of some serious strength and momentum. But then, you have this. At the very same time, inflation, how fast prices are going up for everyday things, had cooled off to a historic low of just 0.3%, like a 10-year low, practically zero.
So this rare combo is what economists sometimes call a Goldilocks paradox. It's like the economy is too hot with all that growth, but too cold with inflation. And that's super weird because normally when an economy is roaring ahead like that, more people have jobs, they're spending more money, and all that demand usually pushes prices up. So to see both of these extremes at once, it's a real head-scratcher, and it creates a massive headache for the people in charge of the economy. All right, so here's the bottom line. This whole paradoxical situation put India's central bank, the Reserve Bank of India, or the RBI, in a really, really tough spot right before they were supposed to have their big policy meeting. Okay, so here's the dilemma in a nutshell. On one side, you've got that super low inflation number, 0.3%, which is basically screaming, cut interest rates. You do that to get the economy going and make sure prices don't actually start falling, which is a really dangerous situation called deflation. But then on the other side, you've got that huge 8.2% growth number. And that's telling them, whoa, hold on. Maybe we should keep rates steady to stop the economy from overheating and causing a bunch of inflation later. So, to cut or not to cut? That was the big question.
So let's pivot and look at how this huge dilemma, this fundamental uncertainty, just sent shockwaves through the financial markets.
And this quote right here, it just nails it. The problem wasn't the good news about growth. The problem was what that good news meant for investors. All of a sudden, everyone who was hoping for an interest rate cut started to think, maybe that's not going to happen now. And that uncertainty, it made the market really, really nervous.
And that nervousness kicked off a classic chain reaction. The hope for a rate cut vanished, so investors started selling off stocks to lock in their profits. And then the big foreign investors, the FIIs, they started pulling their money out of the country. And when all that cash starts flying out the door, it puts a ton of pressure on the local currency.
And the result? A pretty dramatic crash for the rupee. It just slumped to a brand new record low, almost touching that big psychological number of 90 to the US dollar. This was the most obvious, painful symptom of all that policy confusion.
So this table here kind of sums up the damage for the day. You can see the main stock indexes, the Sensex and the Nifty, they took a little dip after hitting those record highs. But the real story, the real victim here, was the rupee. It took the full force of the market's anxiety about what the central bank was going to do next. But this is where the story gets really interesting. Because while all the day traders were panicking about what might happen next week, a completely different story was playing out. And this one was all about deep, long-term confidence in India's economy. Just look at this timeline. It shows a huge contrast, right? While the short-term market was freaking out and selling, you have these huge, long-term investors making these massive, multi-billion-dollar bets on India's future. Mergers and acquisitions were way up, and big international players were still pouring money in for major projects.
And let's get specific, because these deals are seriously telling. You've got a massive $650 million loan from the Asian Development Bank for green energy. You have what's shaping up to be the largest foreign investment ever in the Indian banking sector. And you've got huge real estate deals still going through. Look, these aren't people just gambling on the market. These are deep, strategic moves that show a profound belief in the long-term health of the economy.
Okay, so after this absolute roller coaster of a day, what's the big takeaway? What are we supposed to make of all these conflicting signals?
Here's the most important thing to remember. The market's wild reaction, that big drop in the rupee, that wasn't a judgment on the Indian economy itself. It was a knee-jerk reaction to confusion. It was about uncertainty over what the central bank was going to do. The underlying economy, with that strong growth and all those big investments, was actually still on really solid ground.
And this whole situation leaves us with a really important question. And it's not just about India, it's about any fast-growing economy. What's the better way to judge economic health? Is it the day-to-day noise of the market, which can be super frantic and emotional? Or is it the quiet, steady drumbeat of those big long-term investments? It's definitely something to think about. Hey, if this explainer helped you make sense of the headlines and see the bigger picture, do us a favor and hit that like button, share it, and subscribe for more deep dives like this. And we'd really love to hear your thoughts on that final question down in the comments. Thanks so much for watching.